Good afternoon, Quasar Markets Live. We have a great segment for you. I have Dr. Ellman here, the president of the Blue Collar Investment Corp. And this is your 13th interview with us. I can't thank you enough. I think I've spent as much time with you this year as I have with my family.
You know, Howard, I love doing each and every one of these discussions that we have. Very enjoyable.
I love them too, and so do our viewers. We hit new records on last week's installment. And I know we're going a little bit into the deep end of the pool here today. We've been taking it a little easy on the viewers. I went a little bit more advanced, what I asked you to kind of get, bring people up to speed on. But I think, we've been doing this for a while, and I think we have people ready, to make that next step. So today we are going to talk about time cash dividends and understanding contract adjustments.
Yeah, every once in a while, we'll get an email from a member saying, wait a minute, I sold $100 call and that's gone. Now it says $25 call. I didn't sell 25 call. I sold $100 call. Well, they didn't know about a 4-for-1 stock split. And
Right.
those are known as contract adjustments. And they could be kind of complicated because they all don't fit into one category, as we'll discuss in this presentation today.
Absolutely. And the reason that I brought this up is I know that I got shocked by it personally in the last 2 years or so, a couple of times where I hadn't been paying attention to maybe a sort of mid, swing trade type thing. And all of a sudden, there was a stock split and I'm wondering what the heck just happened overnight.
Right. Well, the thing is that when you have a certain contract that you've purchased or sold, in the case of covered call writing and put selling, we're in the sell side. And then all of a sudden you go back in, you log into your brokerage account and things don't look the way they looked a week ago. Then the first thing you think about, hey, there must have been some kind of corporate event that caused a contract adjustment. Let me find out what exactly happened. So on this particular slide, I listed some of the events that take place that would cause a contract adjustment. And then we'll get into two real life examples. There are certainly a lot more, but the most common I would say is a stock split. So for example, if we sold a 100 covered call, 100 strike covered call, and then we log into our account and now all of a sudden it's a $20 call. Well, it could have been a 5-for-1 stock split.
Right.
So you now have sold 5 contracts of the 20 strike instead of 1 contract of the 100 strike. So the first thing you think about when you see an unusual change in the contracts that you sold is to think about corporate actions. And the list here has stock splits, reverse splits. You might have a 1-for-5 reverse split where 5 contracts become 1 at a higher price. And the reason that corporations may do that, well, one that comes to mind is they may want to prevent delisting from an exchange, where if the price gets so low, they get kicked off that exchange. Or maybe just to look better in the eyes of retail investors. A $50 stock looks a lot better than a $5 stock. So there may have been a 1-for-10 reverse split. So things along those lines would initiate corporate actions, which would then cause our contract parameters to change, mergers, acquisitions, and the topic that you asked me to talk about today, which is special one-time cash or cash and equity dividends, which is kind of special in that it's an unusual event. It's not like a typical quarterly dividend. It's a special one-time dividend. So yeah, these result in changes in the parameters of our contracts. And these changes are made by the OCC, the Options Clearing Corporation, who do a great job of making sure that both buyers and sellers of calls and puts are made whole, Howard. So there are no winners and no losers. Everybody is in really the same position that they were in before the contract adjustment.
Absolutely. I have a couple of takeaways or things that I want to point out to our viewers that might be sort of new to this. So why would a stock maybe split? You know, a lot of times it's that they get too expensive. In other words, again, they want to have it be very liquid. They want to see everybody be available to trade in it. And if something's trading at $2,000, $3,000 a share, it becomes difficult for people to invest. So a lot of times you'll see a split in that manner. And then, as you mentioned, Dr. Ellman, reverse splits we see a lot on NASDAQ, where if you stay under $1 for a certain amount of time, they actually delist you. They take you off of the exchange. So what you'll often see is stocks that are suffering will do a reverse split where, like you said, a 1 for 5 to try to get that price up over $1 and significantly over $1 to not put themselves back in that issue again. So I do want to point that out. If people might ask, well, why do I do one versus the other? Or why did they do that? The other takeaway that I think is just sort of funny is I never knew that it was called the Options Clearing Corp, OCC, because there's another government organization, the Office of Controller of Currency, who oversees banks. That's the OCC. So just something, a little funny takeaway that I have there.
You know, Howard, if I could give you a quick, for your information, I was doing some research recently on Apple computer. And Apple, since its IPO, well, let me throw in Apple and AutoZone. Okay. Both of those stocks have gone up about 40,000% since their IPO. Now, Apple, and this goes to what you were saying before about stock splits. Apple in that time has split 5 times. So the price of Apple, because of so many splits, is 200 and change per share. AutoZone, on the other hand, has split only 2 times since its IPO. So its price per share, I haven't looked at it very recently, but relatively recently was over $3,000 a share. So it shows you why these companies may want to split to allow retail investors to then purchase these shares in 100 share increments.
Absolutely, you know, and that is what I like about it, because it's funny, because I've fallen on both sides of it, coming from the world of crypto, where a Bitcoin costs $100,000, but you can buy it in increments down to a penny, basically. You know, when we saw Robinhood and some of these others off fractional shares, I thought it was going to be something that maybe would take away from stock splits, but we haven't seen that be the case, to be honest with you.
Mm-hmm.
Okay.
All right, so this is, I'm going to show your viewers now 2 examples of the several different ways the OCC may account for these corporate events that result in contract adjustments. The first one is where the ticker symbol doesn't change, the same ticker symbol. And this real life example is with Park National Corp, listed on the New York Stock Exchange under the ticker symbol PRK. Now, on the left side of the screenshot, if you went to the OCC.com, THEOCC.com, and you did a search for PRK at the time or even after the contract adjustment was made public, you would see exactly what you see on the left side of the screenshot. And, you know, your viewers, if they suspect a corporate event causing a change in contract, they can go to the OCC.com and do a search that way. And this is exactly what they'll see. Well, in this particular case, it was a special one-time cash dividend of 20 cents per share. Now, the next one I'm going to show you is a lot more significant, but this shows you how the OCC handled this one. So on the right side, I summarized on the right side the changes that were made and weren't made. So the ticker symbol remains unchanged. That's the example I'm showing here. The deliverables remain unchanged. Every contract is 100 shares. The strike price is reduced by the dividend amount. Now, why is that? Well, whenever there is a dividend on the ex-dividend date, and that's the date you must own the shares in order to be eligible to receive that dividend, on that ex-dividend date, the price of the stock will drop by the dividend amount. So the dividend is not free money. A lot of retail investors think that it is free money. It is not free money. It's a conversion of one asset, the stock price, to another, a dividend, usually a cash dividend. So Now, if somebody bought a call option and looked to be directionally correct, expecting the stock price to go up and therefore the value of that call option to go up, they would be at an unfair disadvantage
Right.
because on the X date, the price of the stock is going to drop by 20 cents a share. Now, somebody might say, hey, Alan, wait a minute. I checked the X dividend date and it didn't drop by 20 cents. No, because there are other factors involved. But one of those factors on that day, the ex dividend date, will be the 20-cent per share drop in price. And then, of course,
Right.
the factors will determine the final price, right? So it's unfair to the call buyer. So the way the OCC handled it, instead of having a strike price of 100, let's say, the strike price becomes 99.80. So
I gotta be
imagine.
honest, I didn't know that. I didn't know that they changed the option strike price. I knew that the price came off of the actual stock price, but I didn't know that this was in play. I got to be 1,000% transparent. No idea.
Well, most people don't know that. And let me just say this because there could be a little confusion here. This applies to special one-time cash equity dividend, not to the typical quarterly dividend that a lot of companies distribute, because those are already priced in to the option
The
premium.
market,
They're
right?
already priced in. But when something comes out of nowhere, like a company has all this extra cash on hand and declares this special dividend, then these are some of the ways that they're handled. And can you imagine having sold the $100 covered call? Now you log into your broker account and you don't see any $100 covered call. You see it
Yeah.
99.80, and you
Yeah,
go,
the whole
what?
strike price is gone.
You might restart your computer. You might smack it.
That would send me, it doesn't happen that often, so I have never seen it personally, but and this is something that is or was happening more frequently over the last 6 or 7 years, as there's been a lot of more scrutiny on stock buybacks. So some companies have chosen to go with a one-time dividend as opposed to stock buybacks when there was a lot of pressure from Elizabeth Warren and some of the others on those.
Yeah, and there was a time like when the market was down post COVID, you wouldn't see much of this. But now that the market has been healthier and stronger and bullish the last 2 years, I expect that we'll see more of it as companies have all this extra cash on hand and decide to distribute it to the other owners or the other shareholders.
Right.
So in this particular case, the ticker symbol did not change, but the ticker symbol was unchanged, but the deliverable stayed the same, and the strike prices were reduced by the dividend amount, which in this case was 20 cents a share.
Awesome. Yeah, like I said, I definitely did not know that one for sure.
Yeah, and again, it applies only to these special cases. So in the next one, if we can move on to the next slide, is Laurel Space and Communications Inc., listed on the New York Stock Exchange under the ticker symbol LORL. Now, in this case, once again, the OCC screenshot that I pulled up from their website gives you all the information on how that was managed. And in this particular case, it was a very robust $5.50 per share dividend.
Wow.
So, but in this case, the ticker symbol did change. And it changed because the parameters of the contract were so very different. Now, if you look at the right side where the ticker symbol changes, the number of contracts that were bought or sold, that stays the same. The deliverables reflect two things: the shares and the dividend distribution. That is, so the deliverables are different, and the OCC then decided to change the ticker symbol from LORL to LORL1, right? So, when you check out an option chain, some of them you'll still see both ticker symbols, but the second ticker symbol with the one after it reflects the change after the ex-dividend date. And that means that per contract, you get not only the shares, but you also get $550 in addition to the shares. And once again, that makes buyers and sellers of calls and puts whole. So these two examples that I provided in this discussion shows you different ways, Howard, that the
Right.
OCC will manage these contract adjustments based on these corporate events. So the question becomes, well, how the heck do we find out about it? This is so unusual, like you said, you
Yeah.
barely seen it. How do we find out about it? Well, I'm going to make
And then
two.
I even have another question. So on does LORL1 become the new option chain for existence, or is it only the option chain that affects that ex-dividend date?
It affects the ex-dividend date, and then eventually the L1 will disappear.
Okay.
And
That's what I wasn't sure. I'm like, whoa, does this change the whole thing?
it's just during that time frame.
Okay.
So yeah, so it'll go back to LORL after they've worked out all the kinks and all the contracts that were done prior to the ex-dividend date, after the ex-dividend date. So yeah, it'll go back. It won't be there forever.
That's what I
So
wasn't sure, because I again, you don't see those that often. You see the reverse splits and the splits all the time, and it can get confusing, especially for those that maybe don't own the underlying stock. That's where I think that people get hit the most, people that are just option trading generally, because there might not necessarily be that little symbol that you see on your trading view or Webull or whatever your thing is that has a little S or a little, thing below it telling you that it's going to split or that it just did split. So I do think it is very important, especially for option buyers and option traders, to make sure that they're looking at these things.
yeah, and your viewers may say, well, how do I, if I notice this, how do I find out what exactly went on? Because in order to know how to complete your trade, how to manage your trade, how to adjust your trade if it's necessary, there are two ways of doing it. Now, one way is to call up your broker account
Right.
and speak to a rep. Now, even if you have an online discount broker, you will be able to get someone to talk to. Now, chances are very strong that they won't know the answer right away, but they definitely have the resources to access that information. So whether they say, hang on a minute, or whether they say, I'll call you back, they do have that information at their fingertips. So they'll be able to get back to you and explain exactly what went on, why the contract changed, and how it affects you. Or if you want to access the information yourself, go to, at the very last bullet on the screenshot, theocc.com, contract adjustments, and do a search for that particular ticker symbol, and you will see a screenshot exactly like the two on the left side of two of the recent screenshots that Howard, you showed your viewers just
Yep.
recently. Those are the two ways they could do it.
And that's what you're talking about, that right there. Yeah. It is important because, I've been caught on, like I said, on the side of it where there was a stock split, and all of a sudden I'm trying to figure out exactly, I'm looking for the $60 strike, and it's not even, it's not there because now it's trading at $20, and, there's $60 out of the so far out of the money that there's no contracts yet. And I'm just like, whoa, what happened here? So I did think that it was important to sort of talk people through it, explain to them, where, like you said, where do you find the resources? I will point out, I know that you are a big fan of IBD, as I am, in the Wall Street Journal and Dow Jones Company's products. You can always go there. Also, they have great information. And if you just put in the stock ticker into any of their platforms, whether it be Market Watch, the Wall Street Journal, or Barron's, they do a good job also of giving you that information in a timely manner, in a way that you can digest it and understand it. And of course, on the Quasar Markets platform, we have all of that information for you, easily accessible in a few different ways, either through TradingView, which is our partner on charting, but then we also have all kinds of that economic data that comes directly up on AIRA and on Trading Economics. So we do have a few different ways for you at Quasar Markets to also come and see that information.
Yeah, Quasar will have contract adjustment information.
Yeah, because we have Trading View in the platform, which would have the small S at the bottom of the chart that you would click on, and it would tell you what was happening there. And then we have a partnership with AIREA, which is a company that does all of those sort of economic calendar type of situations. They do any kind of ex dividends, any type of stock splits, any kind of reverse splits, any of that information. They give it to you in a nice calendar formation that you can use here on Quasar Markets.
That's a good thing to know. I'll let my members know that they have another choice when looking.
Yeah, absolutely. That's a good one that I'm going to start doing over the next week or two. As you know, our new platform has just launched, and I did my first little sneak preview of it yesterday on our morning show. I'll be continuing to do that. And bringing all of our educators on board to our new modules that we have in place, that are really going to level the field for retail investors. I've just been so amazed at the knowledge I've been able to grasp over the last 2 months and talking to people like yourself and Scott Bauer and Stephen Flanagan. We have, Big Beat, Stephen Orr, our CEO, has a Rolodex that just allowed him to contact so many different, people in the industry that are the leaders when it comes to education. And you are definitely one of our pillars here at Quasar Markets. So we thank you for joining us every week and bringing this information to us.
Okay, as I said, I love these discussions, and I'm glad to hear that your viewers are enjoying them as well.
Absolutely. Thank you so much, Dr. Ellman. We will be back next week. We haven't picked our topic yet. We're going to do that as soon as we get off the air here. And I'm sure it will be an exciting one for all of our viewers. Thanks again.
Take care, Howard.